Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 3rd, 2024. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. A bit lower here this morning. Back-to-back days of weakness here, and we are seeing an initial test at or just above the previous session's low. So we are right there at the previous session's low. We are still seeing weakness within range. So here's your trading range here that spans the last couple of weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days in the range now. And we go all the way down to about 47.40 up to about 48.40. It's a 100-point range here. And we could be looking at a drop in within the range, a push back out, as this thing continues to build and perhaps quietly expand. The most bearish scenario would be for price to drop to 47.40 and break through that level and elongating below previous market structure support there, at least from the short term uptrend here. To fail at that level right there would open up a move that could take us back to the gap fill below. So are we going to stay in the range here a little bit throughout the rest of the week as we head into NFP Friday, or do we start a pattern of weakness here ahead of time? For right now, keep an eye on prices below the previous session's low. Any rejection below there could open up a soft return back up within the range until proven otherwise. We take a look here at the NQ. A bit more weakness here in the previous session than the ES. You can see how this thing dropped to previous lows and then dropped all the way into the FOMC key level from December 13th. Another multi-week narrow range here with an upward trend. Higher value relationships month over month, and this market right now is sitting right inside the higher value pivot range relationship here, and also inside the bullish PIMA trigger zone as well. So on a pullback like this, in an uptrend like this, bulls would typically look to defend for a rotation back toward highs. Not necessarily for a breakout right now, perhaps back to highs, then swing back to lows, and as we mentioned before, maybe develop a larger range. But right now, keep an eye on the previous session's low. That's going to be the level to watch here. Being able to respond back above that level could open up a soft bounce back up towards 17K in the previous session's midpoint. A failure though, failure at 16.5 for example, could start to open up quite a bit of weakness back toward a gap fill down below. So that's going to be the key level to watch here up ahead. Taking a look here at crude oil. This one's up 0.3%. The previous session, huge failed new high, outside day down within a very bearish downtrend. The high of the day was right at the key range midpoint, and we are now down. This type of reaction would tend to be very, very bearish. So you have that upper trend line, you have that failed new high here, you still have the very clear downtrending price action. We could be looking at another drop here below. But if there is a failure to push lower and instead the market is able to close through this midpoint today, so closing above the mid today, say this market closed at 72 and a quarter, that would be quite the bullish finish, and it would suggest a big time push to the upside, a push through this high and a rally to new highs likely into about 78 to 80 up ahead. So if we finish the day through the midpoint here, that's going to be huge up ahead. For right now, bears looking to defend morning strength for further weakness until proven otherwise. Taking a look at gold futures. Gold right now down 1%. Breaking down out of this narrow range here, super narrow range. We had that wide key range with the midpoint right there at about 2070, and the middle 50% of that range spans 2111 to 2029. And we could see quite a bit of movement within that range before we actually see some movement ahead. If we are going to see a failure here, kind of like what we've seen before, where we've seen a heavy swing rejection here like we did there, then we saw a pullback with a lower high that took us all the way down. This is the pullback. Perhaps that's the lower high here that's developing. Are we failing at 2100 already? 2080, that zone? If so, a return back toward the FOMC key level below could be in play. 1996.70. That would be a retest of the December 13th FOMC. If we're really starting to swing move down, then you start to work your way back toward the 1850 level overall. That could be quite a ways down there. Do we break that trend line? For right now, a bit of weakness here can take us to 2029. Through 2029 opens up 2000 up ahead. All right, looking at the YM. The YM down about a third of 1% right now, but very narrow range. The previous session gave us a nice intraday key range. So if you look at yesterday's high, yesterday's low, and then the midpoint, that's a key range. It's a key range designed to keep prices in check for the next several days, or at least the next couple of days, and we have seen it play out like that already. Heading into it, you see that key range right now. We're still inside those boundaries with an upward bias. This market has been extremely bullish, has lacked true selling pressure. Anytime we pull back, it's within range, and then we tend to zip off here to the upside. Is that going to play out again this time around? If so, where does it play out? That 37,750 is going to be important because it's that near that key range low. Do we break down and try a bit deeper? And if so, we're still in an uptrend. We still have an LVN. We still have the higher value relationship on the pivot range. That could all help for another rotation up. So again, this market mostly range bound within yesterday's key range. Continue to watch the key range edges for fades. Eventually we see expansion out of that key range heading into this week's NFP report Friday. That could provide a little bit of action here heading into the beginning of the year here. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.